Welcome back, guys. Today I'm back with another video, and sorry for the delay in video. I was busy with my exams, but now I'm back and I'll be posting regularly on my channel. So today in this video I brought you this amazing trading strategy that is based on the fundamentals of market that will tell you about the direction of trend reversal and give you a signal, and you can take buy and short signals according to the strategy that I'm going to explain. And also I'm going to share with you this amazing risk management strategy that will save you a lot of losses. So without any further ado, let's get started. So first of all, let's go ahead and apply the indicators that we're going to need for this strategy. And for that, let's go towards the indicator tab, and here we're going to search for case reversal indicator, and we're going to add this to a chart. Now once the indicator is added, we can see that there are some green and red triangles that give us buy and sell signals. And if we go towards the indicator settings, we can see that this indicator is based on the fast exponential moving average, a slow exponential moving average, a signal line, and also the multiplier, that is the ATR multiplier of these crossovers. So if I just go ahead and change the settings a little bit, for example, if I change this from 12 to 7 and this slow exponential moving average from 26 to 27, and also this multiplier from 2 to 1, now we'll be getting a lot more signals, as we can see here. But here, most of the times, if we increase the frequency of these signals, they will get inaccurate. So let me just go ahead and reset the indicator to its defaults, and also let me just hit OK, so that we're getting the signals that are best recommended from the creator of this indicator. And now let's go ahead and add the second indicator, that is the reverse exponential moving averages oscillator, to the chart, and we're gonna add this one by Jones-Allers to the chart. Now once this indicator is added, we can see that it's drawing this oscillator that is oscillating around this zero line, and this baseline is the zero line, and whenever it's above, that would mean that the market is in bullish momentum, and whenever it's below, that would mean that the market is in bearish momentum. And let me just go ahead to the settings of this indicator, and inside this tile, let me just check these plot histograms, and here let me just hit OK, and we can see that now we're getting these histograms that are being plotted under this oscillator. So let's go ahead and talk about the trading rules for taking long and short positions using these indicators. Before talking about the trading rules, let's go towards this indicator setting, and inside here we're going to change this alpha from 0.1 to 0.17, and let's hit OK, and we can see that now the oscillators have changed a little bit. Now let's go ahead and talk about the trading rules for taking long and short positions. So to take a short position, a sell signal must be issued by the case reversal indicator, and here we can see that there are two signals being issued, but we have to pay close attention because we are only going to consider the signals whenever the candle on which the signal forms is below this blue line. If it's forming above this blue line, in case here and here, we're not going to consider this signal. So let's go ahead and look for any other signal that we can find, and here we can see that the signal is forming here, and again on the candle which the signal forms is above this blue line, so we're not going to consider this as well. In this candle here, we can see the signal is being formed here, and also the candle on which the signal is being formed is below this blue line, so we are going to consider this signal, and we're going to also look for the second condition, that is this histogram should be in the above this zero line. So both these conditions are met, and we're good to take a short position at the close of this candle here. So we're gonna take our short position at the close of this candle as soon as the signal is issued, and we can put our stop loss above this high of the most recent swing high, and we're going to target 1.5 restore ratio. So let me just go ahead and adjust our restore ratio here, and as you can see that our restore ratio of 1.5 is met, and we are profitable. This is a profitable trade of 1.5 restore ratio. Now let me just go ahead and look for any other trading opportunity that we can find for the long position, and if we go back in the past a little bit, we'll be able to spot some trading opportunity as well. So here again we can see that there is another signal that is being issued, but this signal hit a stop loss. So let me just check the second condition as well. Yeah, this hit the stop loss, so we will not make profit from this trade. Now here as well, again we can see that there is another sell signal being issued, on which the candle at which the signal is issued below this blue line, and also the oscillator is above this zero line. So let's go ahead and take a short position at the close of this candle here, and we can put our stop loss above this most recent swing high, and again we'll be targeting 1.5 risk to our ratio. So let me just go ahead and adjust our take profit level, and as you can see, again we are able to take a 1.5 risk to our ratio profit. Now let's go ahead and talk about the trading rules for taking long positions. And for taking long position, following conditions must be satisfied. First of all, there should be a buy signal issued by the indicator, and also the candle on which the buy signal is issued should be above this blue line as well. So as we can see here, there is this buy signal being issued, and also the candle on which this signal is issued is above this blue line. So we can go ahead and take a long position at the close of this candle here by checking the second condition, that is the oscillator must be below this zero line. So let me just go ahead and take a long position at the close of this candle here, and we can put our stop loss at the most recent swing high, and let's see if we are able to take a risk to our ratio of 1.5. So in this case here, our 1.5 risk to our ratio would be almost here, which in this case did not get triggered, and this is a stop loss. Now let me just go ahead and look for any other trade that we can find. So inside here we can see that there's another buy signal issued, and also the candle on which the signal is issued, the oscillator is below the zero line. So let's go ahead and take a long position at the close of this candle here on the very next candle, and we're going to put our stop loss at this last swing low, and we're going to take profit at 1.5 risk to our ratio. So let's see if this risk to our ratio gets triggered, and as you can see that on this candle here we are able to take a 1.5 risk to our ratio profit. Now I'm going to share with you a risk management trick, that is you should only risk 2% of your trade, so that way you will not blow up your account in a single trade. Now inside here we can see that there is another signal being issued, but we would not consider this signal as a valid signal because the candle on which the signal is being issued is below this blue line. So we will not consider this to be a valid signal. We will only consider a buy signal valid if it's forming above on the candle that is above this blue line here. So we will not take this trade. So this is how you can take long and short positions using this strategy. I hope you were able to understand how this strategy works. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you in the next video. Thank you.